Dear colleagues and partners, welcome to the information session on UNCDF's call for expression of interest for loans and guarantees for building inclusive digital economies that leave no one behind in Bangladesh. My name is Andreas, and I'm working with UNCDF's Inclusive Digital Economies team based in New York. This meeting, for your information, will be recorded for writing meeting minutes purpose. So glad to have many different existing and prospective partners here at today's information session. For the agenda of today's session, we will start with an introduction about UNCDF and UNCDF in Bangladesh, after which we will speak about UNCDF's investment mandate and use of financial instruments and a brief about that, following more specific information going through about the expression of interest. The majority of the session will then be spent in an open Q&A where you can ask questions. If you have any questions during the presentation, please type in the comments or Q&A sections, and we will take as many as possible during the Q&A open floor discussion part of the session. During that session, you will also have the opportunity to raise your hand and ask your question on the open floor. I would first like to now give the floor to my colleague Sakshi Chadha, Digital Country Lead for UNCDF in Bangladesh, to provide an introduction about UNCDF and UNCDF in the country. Thank you again to everyone for joining, and over to you, Sakshi.
Great, thank you. Thank you so much, Andreas. For some reason, I'm not able to start my video, but no worries, that's not a problem. I'll still get started. Hello and welcome everybody. My name is Sakshi, as Andreas mentioned. I'm a digital expert and also lead UNCDF's Inclusive Digital Economies practice work in Bangladesh. It's a pleasure to have you all join us. Can you please move to the next slide? Great. So we'll just quickly sort of look at UNCDF's overall structure, its capital mandate more specifically, as that's very relevant for the purpose of this call. And in the next couple of slides, I'll also talk a bit about some of our work in the country and how we are sort of structured. So moving on to the slide that we all can see on our screen, UNCDF's capital mandate, as many of you would know, actually, UNCDF has a unique hybrid model, which is at the crossroads between a development agency as well as a development finance institution. We are UN's development finance arm, which primarily for the 46 least developed countries. UNCDF's work directly, we work both with the private as well as the public sector players. And I think very relevant for this call is that from the very beginning, UNCDF was given a unique capital activation mandate, and we are quite thrilled and excited to more actively pursue that in Bangladesh. As you can see below, these are some of the instruments, financial instruments as well as technical instruments that we sort of have at our disposal as we actively engage in the country, such as technical assistance, capital investments, market research, and advocacy. Next slide, please. Looking at UNCDF's inclusive market system development approach, we essentially have four pillar of engagement that we work with. First one is enabling policy and regulation. So this is the one where we sort of work with the government to develop policies, that work towards development of digital services or inclusive digital economies with the intention to not leave anyone behind. Second, and one of a more prominent piece of work for us in Bangladesh is also inclusive innovation, wherein we support local entrepreneurs, financial service providers, as well as SMEs to promote inclusive digital services. We also work on the third pillar, which is empowered customers and their families to acquire necessary digital as well as financial skills, which are very relevant in today's world, as digital becomes more and more prominent, especially with the impact of COVID-19. And the last pillar, and not least, is the open digital payment ecosystem, wherein we work towards, supporting digital ecosystem to develop physical and payment infrastructure that is needed to increase inclusion for those who are most left behind. Some of the instruments, again, that we sort of work with are customer centricity, which stays at the heart of most of our projects, data and research, stakeholder engagement, expert technical advice and training, and de-risking financial instruments. Next slide, please. Over here, we'll sort of just talk about some of our country priorities and our work in our country. We've been working in Bangladesh since many, many years. And at this point, the milestone priorities that we are working with the government and supporting them on are LDC graduation, which is aimed for 2026, as well as becoming an upper middle income country by 2041. Also looking at country framework, a lot of our work we do in the country sort of to at this point align with eighth year plan to support the country to graduate for the LDC. Some of the objectives and priorities for us in the country are definitely to accelerate economic recovery after COVID-19, and we initiated specific projects in the country to cater to this. Also promote economies and societies which are more inclusive and resilient, such to external shocks, and obviously COVID-19 was one of them that many of us had not imagined before. We also sort of work towards increasing digital payments, supporting entrepreneurship, preparing MSMEs for digital transformation, and digital ready workforce. At the heart of all this, I think women, MSMEs, and youth sort of stays as a primary focus area for us, with a lot of work happening in Bangladesh also on migration and remittance. Next slide, please. This is just a brief snapshot of our partners in the country, multiple public sector partners, private as well as technical partners and funders. And we are quite proud as well as, thankful to all the partners in the country who sort of provide us the necessary support, but also work with us as implementation partners on the country to implement various projects that I briefly touched upon. Next slide, please. Yes, over to you, Andreas. Thank you.
Thank you very much, Sakshi, for that introduction. We will continue to speak more about UNCDF's investment agenda using loans and guarantees. And we see that these financial instruments are additional tools to support our inclusive market development agenda around the inclusive digital economies. To pursue this, we are looking at a few categories that target enterprises for these investments to fulfill this mission. These fall broadly into three categories: tech companies or enterprises with tech-driven, digitally enabled business models across finance and digital innovation, green economy and clean energy, agriculture value chain, food processing, food security and nutrition, and telecommunications infrastructure and last mile connectivity sectors. Also looking at financial service providers, including financial institutions and non-bank financial institutions, and small and medium enterprises that not necessarily currently have a tech-driven, digitally enabled business model, but that can leverage use of technology to improve efficiency, organizational performance, and customer outreach across finance, green economy, and agriculture. All these investments are intended to contribute towards market development, contribute towards building inclusive digital economies, particularly for vulnerable customer segments, including women, youth, micro, small, and medium enterprises, and migrants, and unlock further semi-commercial or commercial financing. Now I would like to give the floor to my colleague Charulata Singhal, who works with our investment platform team, an arm of UNCDF supporting with investment due diligence and credit assessments for loans and guarantees as financial instruments, to speak more about the investment continuum at UNCDF and how we can support these target enterprises. Over to you, Charu.
Thank you, Andreas, and good evening, good morning to all from New York. It's a pleasure to be here. So let me jump straight into it. This very complicated looking visual is actually not that complicated. Essentially, what we're trying to say here is that UNCDF complements the other financing which is available in the market through its own offering, which Sakshi explained. Now, we recognize that all financing entities in the ecosystem play an important role. So you have banks, they play an important role. We have other commercial investors who play an important role as well. Where we come in is that we see a gap in the financing architecture where we can support companies throughout their growth journey depending on what their needs are and what is their stage of growth. So if you look at this diagram on the extreme left, you see UNCDF sourcing capability, which is essentially what this call is all about. We have open competitions. We have partnerships on the ground, and exactly like this EOI, which has been floated. And through this, we invite companies such as yourselves to apply in this call. And then based on that, companies and entities that meet the criteria listed therein could have access potentially to either some UNCDF grant funding or through our other capital investment instruments such as loans and guarantees, either through our bridge facility, which is funding from our own balance sheet, or if the companies are further advanced in their growth stage, then they could also get access to more more commercial type funding from the Build Fund, which is a third-party managed fund wherein UNCDF advises the fund and provides pipeline. Essentially, the idea is through these different types of funding needs that we can help the company satisfy. In the end, we're helping companies connect with commercial investors and be ready to receive commercial investments in the geographies in which they work. And throughout this process, we recognize that our partners on the ground could need more hand-holding support. So we typically provide technical assistance along this entire journey. And that's the, that's our offering. We're happy to provide this investment continuum and support for tech companies, SMEs, as well as financial service providers in Bangladesh. Over to you, Andreas.
Thank you so much, Sharu, for that brief. So now we will go into a little bit more details about the expression of interest. So this expression of interest aims to collect information of prospects for UNCDF to issue loans and guarantees that contribute towards building inclusive digital economies in Bangladesh. The investment instruments offered are in two categories. One, concessional debt and guarantees in the range between 100,000 and $1 million available in local currency. And debt is offered on concessional terms, including interest rates, tenor, and collateral requirements. Number two, semi-commercial lending and equity investments in the range between 250,000 and $2.5 million available in local currency. And the suitable investment will depend on the financial needs and the risk return profile of the organization, as well as funding availability. The investments will come together with a technical assistance facility components with tailored pre-investment and post-investment technical assistance as required. And UNCDF will assess applicants' potential for investment according to set eligibility and organizational, financial, and impact shortlisting and evaluation criteria. UNCDF will follow its investment management process while assessing applicants' potential for investment. So this slide summarizes the investment management process that UNCDF uses. I won't go into further details on this. The process is also mentioned in the expression of interest document. If you have any specific questions regarding this, please type them in the comment or Q&A box, and we will answer them as we go along and in the Q&A part of the session. These are also then the eligibility criteria for this expression of interest. The organization must be a formally registered entity. It must be a for-profit, non-profit, or private-public partnership. Must either be a tech-driven company with a digitally enabled business model or a company that can leverage such technology to improve efficiency, organizational performance, and customer outreach. And it must be operating in Bangladesh. And must be operating in one of the sectors that mentioned before, in finance and digital innovation, green economy and clean energy, agriculture, value chain, food processing, food security and nutrition, and telecommunications, infrastructure, and last mile connectivity sectors. It must have also fulfilled all the obligations relating to the payment of social security contributions or obligations relating to the payment of taxes in accordance with legal provisions. and must comply with relevant standards, regulations, and applicable legislation to which they may be subject, and possess required regulatory approvals, licenses, and certificates for their operations. And it must have 1 year of audited financial statements or be in the process of obtaining audited financials. There are also a few specific criteria for credit providing organizations to be compliant with non-involvement standards of financial frauds, notably large-scale financial fraud cases, including anti-money laundering, and if so, will become ineligible and need to be in compliance with prudential regulations and guidelines, including corporate governance measures and risk management procedures. For the shortlisting and evaluation criteria, as there are also in the expression of interest document, I won't go into further details here, but if you have any specific questions regarding these, please type them in the comment or Q&A box, and we will answer them as we go along and in the Q&A part of the session. So finally, this slide is some information for the submission. In order to submit an entry, you can fill out the form on the UNCDF e-investment apply platform. On this platform, once you have assigned a name to your application first, you then fill out a eligibility screening form. If you pass the eligibility screening, you will then be able to proceed with filling out the main application form. And the option to fill this out will appear on the application page if you pass the eligibility screening form requirements. So the link to the application form is here on the screen and also in the EOI document and UNCDF website for this expression of interest. And the submission deadline is 28th of March. The final thing I want to mention that this call for expression of interest is an open-ended call with reoccurring quarterly deadlines until end of this year, until end 2022. So the deadline for this first quarterly assessment is 28th March. You can submit the information under the call after this deadline, but your entry will be assessed on an ongoing basis. In order to make sure you are assessed in the first round, you should submit your entry by 28th of March. So now we will go into open floor discussion and open Q&A. I will ask my colleague Sakshi to monitor the questions in the comment and the Q&A sections. And we'll take any questions here in the open floor as well. So if you have any question, please raise your hand if you would like to ask a question in the open floor, and I can unmute you to speak. And until we have some questions and some hands coming up, I see already we have one hand coming up, but otherwise, actually, please monitor the questions as well, but we can take one of the questions from the floor. So Mehdi Hassan, please go ahead.
Hello, hi, my name is Mehdi. We're just setting up a fintech in Bangladesh, in Financial Bangladesh Limited. So we are actually trying to build a neobank for SMEs, targeting to MSME and offer them digital financial services. So I saw that one of the requirements is to have a financial statement but we are a very new company just setting up. So we don't have the financial statement for local entity at this moment. So can we apply still?
Thank you for your question. Charo, do you want to take this one or should I take this one?
Sorry, I was trying to unmute myself. Apologies for the delay. Thank you, Mehdi, for your question. So, I think what you need to do is just look at the criteria a little bit more in detail. Typically, if you are looking to receive a loan, or something of that nature, having a business which is already running would be required. It really depends on the kind of financing you're looking at. If it's an early stage business, It's not that we can't look at it at all. You should have the necessary licenses in place. You should have some sort of audited financials, or you should be in the process of obtaining audited financials. And it's understandable that you may not have, let's say, a profitability right away, maybe, but there should be a clear path to receiving this profitability in the very near future. So things like that, I think, are needed. Formal financials projections would be needed as well. And you should have a total equity of at least $100,000 in your business. So these are just some of the specific eligibility criteria for companies which may be early stage. You'll find more, of course, in the expression of interest document.
Okay, thank you. Thank you very much.
Thank you, Mehdi. So I'm not sure if there are questions coming in the chat. Sakshi, there are a few hands over here still. So
can I?
Maybe we take one more hand and then we can take a question from the chat.
Sure.
Okay, I'll take one more hand here. So Subrata Kumar, please go ahead.
Hey, thanks, Andreas. I had a couple of questions. So the first one is that how is the semi-commercial lending different from concessional debt? Could you please mention the rough tenure, interest rate, and collateral requirements for each of these?
Yeah, let me take that, Andreas, if that's okay. So Subrata, so I think there's a typo in the slide. It's not only semi-commercial, it will be semi-commercial/commercial. It really depends on the company, where it is, and what sort of funding can it take. So there are two types of debt. There is a concessional debt and guarantee, and the second is more semi-commercial, commercial type of financing. So your question was what types of tenor and what types of collateral, right? So
interest rate.
Interest rate. So, I mean, the interest rate is a difficult question to answer on a call like this, where you have multiple types of companies with different financial standing and different risk profiles. So you would appreciate where the risk is more, the interest rate would be more. Where the risk is lower, the interest rate would be lower, right? So I can't give you a ballpark number at this point. What I think where you can draw guidance from is the fact that you have two types of financing, either concessional or you could have semi-commercial, commercial type of financing, more commercial like. I think that you are in the market, so you have a better sense also in that sense of what is market rates. Now, in terms of tenor and collateral requirements, first of all, in terms of currency, the financing could be provided in both hard currency as well as local currency. So that's one thing that should be borne in mind. And in terms of tenors, it again depends on which types of funding you access. It could go up to 8 years depending on the type of financing, but typically would be in the range of 2 to 3 years. In terms of security, we could take unsecured exposure as well, but it could also be secured. And if it is secured, there are various types of security that could be taken. It could be against the assets, it could be against share pledges. I mean, there could be multiple types of securities. So again, it really depends on the type of company, the type of business, the assets on the ground, etc. So we are flexible with that, I think, is a message I want to leave you with.
Thanks. That's helpful, Charlotta. I had a couple of more questions. Shall I go?
Yeah,
I will
ahead.
Actually defer to, yeah.
Okay, Andreas, thanks for that. So the second question is about, is it possible to make changes in the application if we submit now? For example, addition of a new consortium partner. So that's one. And the other one is related to the point Charlotta mentioned a little while ago, is about having $100,000 in equity. So if you are considering nonprofits for debt financing, is that also a requirement? I mean, what is the requirement in case of nonprofits if you're considering them for debt financing?
Andreas, you want me to take that question?
Yeah, you can take the second part question. Maybe I can take the application question after you answer that part.
All right, thank you, Andreas. So again, Subrata, when you say debt financing for nonprofits, that's a little bit a difficult one for me to again immediately answer, right? When you say nonprofit, is it a business which doesn't intend to make profits? Is it a foundation? Is it an NGO? What is it? If it's a business which does not make profits, which is going to be, it doesn't have such profitability trends or expectations, I don't know whether debt would be the right instrument for such a business. So again, I think we have to be very clear about what kind of business are you looking at. If it's a going concern, if it's making profits, if it can service debt, then there would be debt provided. If it's a company which cannot service debt, of course, we cannot provide that company with debt. I hope that sort of addresses the question there. Back to you, Andreas.
Yeah, and the first part of the question on the application, I don't think once you have submitted the application, I don't think you would be able to make changes because, of course, we have to give equal opportunity to everybody. So, yeah, it depends on the if you will be shortlisted, etc. We can have a continued dialogue and you know, update or have more recent information at a later stage in the process if necessary. But during the application, I think once you have submitted, you cannot make any changes.
Thanks.
Okay, so Sakshi, let's have a question from the chat.
Great, thank you so much, Andreas. Just to be fair to people who actually wrote their questions in the Q&A section, we have a couple of them here, so I'll go through them one by one. The first one is, I understand how debt will be managed or serviced, but how will be equity traded? What form or forms of return or equity is envisaged?
Okay, I guess that's a question for me. All right. So again, what form, how will equity be traded? It depends on your company. If your company is publicly traded, of course, the equity would be traded on public markets. If the company is not publicly traded, then, you know, it depends on how, when we do the assessment, how an exit is envisaged. Is it envisaged through a private sale? Is it envisaged through an IPO route? I mean, then on that basis, a decision would be taken or it would be adjudged. In terms of what is the expected rate of return, I kind of addressed that already in one of the prior questions. On the return expectations, equity would only be provided through the build fund, if at all. And the build fund is a more commercial, semi-commercial type of entity because it is funded by, you know, commercial investment money. It's a blended structure. So there would be a return expectation. I think in terms of guidance, think about the return expectations of other impact investors on the ground in Bangladesh. There are several, but it's again very difficult for me to give you a number. It really depends on the type of company, it depends on the business, it depends on the risks which are entailed, how the exits are being envisaged, it's near term, late term. All of these factors play into the type of return requirements that are needed to meet investor expectations. Over.
Thank you, Charu. So I'll take another one, and this one's interesting, and maybe again for you, Charu, and then Andreas can also step in. So the question is, if any organization is neither tech-driven or digitally enabled products or service org, nor leveraging such product or service, would the organization be considered as eligible organization for this type of financing?
Andreas, that's more a question for you.
Yeah, maybe I can take this one. So I think if you are either or, it will be a bit difficult for us to shortlist your company, but it really depends on your business model and how it aligns to the inclusive digital economy vision and mission that we have. But my first thought as a response to that is maybe it would be a little bit difficult for us to shortlist, as it would be difficult to align with that vision if you fall under neither.
Thank you, Andreas. Great. Just one more here in the Q&A section. So what will be the tenure of any financing option, or is it variable to organizational?
So
thanks,
that's yeah, Charu, go ahead, please.
So I addressed this again, I think in one of the questions that, if I'm not mistaken, Subruto had raised. The EOI has details. Financing could be up to 8 years maximum. That's the outer limit, but of course that is not going to be the length of financing for all or most of the funding that is provided. Most of the debt would perhaps be in the 2 to 3 year range.
Yes, actually, do you want to take another one from the chat?
Yeah, I'm just looking for more questions in the chat. Thank you so much, Charu, for that. There are quite a few actually. Yeah.
I think there's one question about, is the interest rate going to be above the bank rate, which is the interbank rate? Now, again, an interbank rate is the risk that one bank is taking on another bank. If your company is rated or is qualifying for such a low risk, I mean, that's when you should be considering an interbank rate of interest. If your company or business results in a higher risk than that of another bank, then one should not expect that interest rate. So I think that should again address the question. The interest rates and pricing will be determined by the type of business, the risk it presents, and yeah, then and of course the details of the operational environment and other such aspects.
Yes, actually, maybe one more question from the chat, and then there is a hand raised here as well.
Sure. Just 1 second. I think this one's also interesting. I think you've already, okay. There's another question from Jahirul Islam, which says, is the funding range typically for an individual entity? I think that's a question that we've sort of already addressed, Charu, Andreas, right? So I'll move on to the next one. Okay, this one is from Sanjida Tani. For a goat stays business, if we have financial docs for the holding company registered in another country, but operating in Bangladesh for less than a year, does that make the company eligible? Yeah.
If the company has been operating in Bangladesh for less than a year, I don't think it makes it ineligible per se. From my immediate recurring, but typically we would like to see the company, having. So let me take a step back, right? You need to think about, if you're looking for a loan or a guarantee or some such type of funding, essentially the business has to show that it has a clear business model, that it is making money, that it is credit worthy enough to take a loan and service a loan. So again, that should sort of influence the response already. If there is the holdco is registered in another country, I mean, that doesn't matter really. If the company is operating in Bangladesh for less than a year, how has the business been doing? Is there a reasonable reason why you believe that if you get a loan in 3 or 6 months, you can actually service the loan? I think that sort of should influence your response more. But I think typically we do prefer companies which have been operating for at least a year. Andreas, am I missing some fine print in the expression of interest eligibility that you have?
No, I think you covered it all, and it follows the general eligibility question about having 1 year of financial statements or in the process of obtaining that. But I think the answer that we are keeping coming back to is that we could be flexible, and we need to look at the larger picture of how the company is standing, and the case and the fact that the company is registered somewhere else does not necessarily matter that much. It matters their financial standing and future possibilities in Bangladesh that matters.
Yeah, and I also think, maybe just to add, I think what would help our clients or the participants in the call is to think about, what type of financing are you looking for? Are you looking for grant funding? That is more attuned to a business which is very, very early stage, let's say, is just about starting out, doesn't have enough revenues, things like that. If you're looking for a loan, a guarantee, an equity investment, I mean, you would have to display that you are going to be able to make the necessary payments that come along with that, right? So I just think maybe that's an aspect to keep in mind. But yes, in terms of strict criteria and eligibility, again, I would kindly request that please take a look at the EOI per se. Typically, we do require at least 1 year financials, audited financials, or at least 1 year financials of the business. Over. Back to you, Sakshi and Andreas.
Thank you so much, Charu.
Okay. Thank you, Charu.
There's one question, Andreas, if that's okay,
Yeah,
I'll raise and then I'll hand it over to you for live questions. So there is one from Mohammed Raisul Haq, and he's asking if the company is loss-making company, which do not have any share capital, and there is no possibility of earning profit in next 2 to 3 years, would it be eligible for financing?
Yeah, Charu, maybe you can take this one as well.
So if the company is loss-making, it doesn't have a minimum equity requirement, then my question back to you would be, how would you service the debt? How would you pay interest when you don't expect the company to make profits? And if there is no such expectation of being able to meet your interest obligations and your financing obligations, then maybe debt is not the right instrument for you and for the business. Maybe you need a different kind of funding available, funding for your business. So from our perspective, we would only provide such financing to businesses that are going to be credit-worthy businesses and are going to be able to service the requirements of such financing. Otherwise, we would be doing a disservice to the entities by forcing, or not forcing, but by approving a loan to somebody which is not, or to an entity which is not going to be capable of servicing the needs of that loan.
Okay, thank you, Charu. So I think we have one raised hand that has been up for a few minutes already. So Paive Mohammed Ashek, please go ahead.
Thanks, Andreas. Can you hear me?
Yeah.
Okay. Actually, I think the questions I had in mind, most of them are answered already. Part of my question was related to what Subrata was actually inquiring about. Well, this EOI sort of is relevant for not-for-profit companies as well. And I was wondering how debt or equity financing can actually be related to a not-for-profit kind of entity. Now, for example, I come from a world where we're dealing with an entity that is registered as a not-for-profit, but a private company in Bangladesh. By not-for-profit, it means that it doesn't mean that it will not make profit, but it cannot really offer any profit to any party, because it does not have any equity or shareholders in the company, and it has no kind of shareholding arrangement in the company. The legal structure of the company, it's really run by a trust. But even then, that's a private company registered under the joint stock of companies in Bangladesh. So my question is, would this kind of entities be at all applicable under this EOI? And the second is, I've seen grant in the mix of things in the framework, but I reckon that grant is not part of this EOI. Would that be correct?
Unless I can take the first part of the question while you take the second. So
Yeah.
on the first one, you're absolutely right, Mr. Parvez. Indeed, the comment about non-profit companies being eligible is exactly what you're saying. It could be registered as a non-profit organization legally, but as long as the business model is sustainable, that the business model and your profit and loss statement and your financials show that you are able to generate some revenues, you are able to meet all your expenses, including financial expenses related to, let's say, if you take a loan. Of course, there are entities which, all the profits which are made by the business are plowed back as equity into the same business, and there are no, let's say, external shareholders to whom dividends are paid out. That's fine. We have financed entities like that. But the comment earlier was more on the fact that it really depends on the business model. If your business model is such that you're going to be loss making, or you're not going to generate enough revenues to service the financing costs that you are going to have to bear, then really it won't make sense. But just purely by virtue of being a non-profit organization, it doesn't disqualify you. You are eligible to apply.
Okay.
Yeah, and for the second part of the question, indeed, this is for other financial instruments, loans and guarantees, the debt and equity investment instruments and guarantee instruments. It's not, grants is not part of this expression of interest. However, if the company is, you know, a potential candidate that fits within our mission, but maybe debt and guarantee instruments the company is not ready for this, we can consider whether a grant would be suitable as an investment as well. So it's not completely closed, but it depends on how it fulfills other criteria, eligibility criteria, and how it fulfills into the inclusive digital economy mission. So the door is not completely closed, but this is for sure focus on the financial instruments that I just mentioned, and as the focus of the EOI.
Okay.
Okay, Sakshi, are there any more questions from the chat?
Yeah, thank you so much, Andreas. Just
Oh, you're on mute, Sakshi.
Sorry, my bad. No, just sort of wanted to add on to your and Charu's response to the last question on the grant point, Andreas, if that's okay. And I think, but you still already did mention that, but specifically looking at grants for inclusive digital economies, we do keep putting out requests, inviting applications for grants through RFAs from time to time, specifically depending on what sector we are looking to, you know, increase our exposure in the country on. And there are multiple such partners that we work with in Bangladesh. So do keep a watch for that, you know, if you're interested and if you fit the bill. And in terms of questions, yes, there's one from Farid Alam. So just reading that one out. Is there a percentage restriction on the payroll and activity budget on project design that reflect in financial proposal?
Charu, is this a question for you, perhaps?
I'm not sure I actually even understand the question. I don't believe we have made any such restrictions that payroll cannot be over a certain percentage of your overall P&L statement or income statement. So I'm not quite sure about the question, unfortunately. Sorry.
No worries, Charu. Andreas, can we unmute Farid? Would you want to step in and maybe ask your question directly? I think Charu did already address it in a way, but if there's more to it, please.
Yeah, if they could raise their hand, I could just unmute to speak. If they would be comfortable to ask the question in the main floor. I don't see a hand, but I see some other. I see a new hand. Maybe we can take a question in between.
Sure,
so
please.
one.
Yeah.
So Subrata, is that a new hand that you have raised? Do you have another question?
Yeah, yes, Andreas, I actually needed some more clarification from Charulata on the issue of non-profit, the business model and the kind of capital that is being used. Shall I go ahead?
Yeah,
Yes,
go ahead.
please.
Okay, so Charulata, let me tell you about our enterprise. Halo is a social enterprise, and it is a revenue generating business. Only thing is that we initially registered this as a non-profit 3 years back, and all the financials, the P&L statements and the financial statements that we have is for the last 3 years. We are in the process of setting up a limited company. My question was that from the very beginning, since this was set up as a non-profit, we utilized loans as well as grants so far to operate our business. So the business is basically we buy farm inputs like seeds, fertilizers, etc. from suppliers. We sell it to farmers, we sell it to them on cash, we provide them also with credit, we provide them with advice. So that's the business. So in this business, what we need is that we need to pick up the cost of the people that we have and also cost of marketing and cost of capital, the money that is being used to buy the products and offer credit to the farmers. Now, we have used loan for buying the products and selling it to the farmers, and we have used grants largely to pick up the cost of the people and the interest that is being paid. Now, in our discussions with angels and VCs, they are not very keen on providing the capital that is required for inventories, and that is where we potentially see that this kind of capital could help us. We can potentially use this kind of capital, concessional debt perhaps, to meet our working capital requirements for inventories, and then we can use grants and venture funding or angel funding to cover our cost, including the cost of capital. Does that make sense to you?
Yeah, I want to be cognizant of not going company by company here, Subroto, because then everybody would have specific company related questions, and I don't want to provide a half analyzed answer because I'm just going by what you're telling me and not looking at any documentation here. But just broadly, let me give you some guidance. So when we are looking to provide any type of financing, right, whether it's concessional or through the build fund, if it is more commercial type of financing, the analysis and the diligence will always be on the type of business, on the operating sustainability of the business model. If your business model is one which is currently financed a lot in part or in a large part of it by grants, but you expect to whittle it down in the very near term, the grant financing piece, that shows to us that your business is likely to be more sustainable and be able to stand on its own feet in the future. If your business model is one where you say, well, I get an X amount of grant to fund my operations, that's keeping me going right now, which of course happens when the company is more new in its evolution. And even in the future, I expect this to continue. Then from the analysis perspective, it raises a question of when is this company going to be creditworthy on its own legs, right? Or am I providing concessional financing, let's say, which is funded by taxpayers, to be clubbed along with current grant making already? And am I really helping the company move along its investment growth journey or its continuum of growth? So I think that's a question that we will always ask ourselves, because in the back of our mind is always a question around what is our additionality, what is the, are we distorting the market or not? Are we helping the company grow or not? So, and is this a business which is a sustainable business model or not? So I don't want to specifically answer, Subroto, the details as it relates to your entity, because I don't have all the information in front of me. But on the basis of what you have given us as information right now in the call, I think my answer should give you some feedback points which should help you assess.
Yeah,
Andreas.
Correct, Chair. Thanks for that.
Great, thank you, Subrata. So, Sakshi, are there more questions in the chat?
Nothing else. Andreas, we've covered it all, yeah, as of now.
Okay, I think there is one more question, hand raised.
Sorry, Andreas, can I come in? I'm sorry to interject. So I just want to come back on the question that somebody had raised about what if I have if I have been operating for less than a year. I just re-looked at the fine print, and indeed, I believe the criteria does say that you need at least 1 year of audited financial statements. So if the business is not there yet, then maybe you should wait till you reach there so that you can be eligible for financing under this particular expression of interest. Back to you, Andreas.
Okay, so we have one more question in the open floor. It's still, I don't know if it's a new hand or an old hand. Parvez Mohammed Ashek, is that you have another question?
It's a new hand, actually. Yeah. One question is, are you going to share the minutes of this meeting with us? But that's not my real question. The other question is actually around the innovation piece, the business model piece. So I see it at two levels, how you will sort of assess the viability or profitability of an enterprise. One is based on the existing P&L. The existing P&L will tell you something about the health of the company, but that company may or may not have already introduced a financial inclusion or digital innovation. which may actually open up the growth potential for the company, and which will be a different P&L altogether, projected P&L, let's say. So how are you going to assess the potential of a company if the company has not already introduced digital innovation or financial inclusion, which is something they're potentially thinking of or working on, and probably will be reflected more in their projected kind of P&L than existing P&L. And that was one question. And the other is slightly related, actually. I mean, I find that financial inclusion can be in itself a space with or without digital innovation. So how do you look at that?
Yeah, so maybe a comment on the business model and the digital aspect that, as you mentioned. I think first and foremost, we're looking at these, the financial health of the company, and as Charu has been saying about the credit worthiness, if you will be able to sustain a loan. And I think as a second aspect, if you don't necessarily have a tech or a business, a digitally enabled business model now, but have expansion plans, have that as an area where we could actually support your growth into, if you are a financially healthy company already, I think that's an interesting journey to be on, and it could be an interesting company. And of course, it would be it could be a very relevant type of journey that we would look at as a company that could be interesting. So I hope that answers that. And then, of course, the meeting minutes, I will upload the PowerPoint and also the recording of this on the Expression of Interest website. And also I will upload the FAQ document there with the questions that has been asked in this forum. So all that information will be on the Expression of Interest website a few days after this.
Fair enough. Thanks.
Thank you. Okay, Sakshi, any more questions in the chat?
Nothing else.
Well,
yeah.
Okay, that was just a general comment. So unless there are any other questions in the open floor, any other hands raised, or any other questions coming up in the Q&A or chat, we would be then closing this today's event. So please write to us if we did not have time to take your question during the session. We want to answer all of your questions and concerns. So please write to us if you still have questions. And thank you all very much for attending, and wishing you a very nice evening and a good day. So thank you very much, everybody.
Thank you.
Thank you, everybody.
Thank you all. Have a nice evening. Bye-bye.
Bye-bye.